Do you ever feel like every loss in trading is proof you'll never make it? I know that pain. I've been there, watching account after account bleed, thinking the market was against me. But here's the truth. It's not the market, it's how you see losing. In this video, I'll show you why accepting losses is the one shift that turns struggling traders into consistent winners. These lessons will challenge everything you believe about trading, and if you apply them, they'll change the way you trade forever. Before we dive into today's lesson, if this is your first time here, make sure to hit that subscribe button. And if this video shifts the way you think about trading, don't keep it to yourself. Share it with your trading buddies. I accepted losing long before I started winning, and that single decision changed everything. Most traders spend their lives running from losses, pretending they don't exist, or trying to avoid them at all costs. But here's the truth. Until you accept losing as part of the game, you'll never really know what it means to win. Today, I'm sharing 8 powerful lessons from my own journey, from being the trader who feared every loss, to becoming the trader who finally found freedom, consistency, and profit. Let's start with the first insight. Losing is not failure. When I first started trading, I thought every losing trade was proof that I wasn't good enough. Maybe you felt that way too, closing a trade in the red and immediately asking yourself, am I even cut out for this? Here's the thing. Losing is not failure. It's information. It's feedback. Think of it like school. When you get a math problem wrong, the teacher doesn't expel you from class. Instead, you learn what mistake you made, and you try again. Trading works the same way. I remember one of my earliest trades on US dollar to Japanese yen. I lost $300 in a single day. As an amateur, my inner voice screamed, "This means you're not smart enough. You should quit." But over time I realized, no, it just meant I needed to review my process. That shift alone saved my career. Look at history. Jesse Livermore, one of the greatest traders of the early 1900s, went bankrupt multiple times before becoming legendary. Did those losses mean he was a failure? No, they were stepping stones. Books like Trading in the Zone by Mark Douglas make this crystal clear. The market isn't judging you. It's just showing probabilities. A loss doesn't say anything about your intelligence, your future, or your worth. Think back to 2008. During the financial crisis, even billion-dollar hedge funds took losses. Did that mean they were failures? No, they adjusted, adapted, and many came back stronger. Let me ask you, how do you see your losses right now? Do you treat them like permanent scars, or like lessons? Here's my advice. Next time you take a loss, don't call it failure. Write down what the market was teaching you. Train yourself to see every red trade as part of the tuition fee for your future success. A loss is not failure, it's information. It's the market's way of teaching you what works and what doesn't. The casino mindset. One of the biggest turning points in my trading career came when I stopped thinking like a gambler and started thinking like a casino. At first, I was desperate to win every single trade. I put all my focus on being right. And every time I lost, it felt like the world was ending. My inner voice kept saying, if you can't win this trade, you'll never be a good trader. That mindset kept me stuck. Then I read something in Best Loser Wins by Tom Hoogard that clicked. Casinos don't panic when someone wins big at the blackjack table. Why? Because they know the math. They have an edge that works over thousands of hands, not one. I realized my mistake. I was trying to be the lucky player at the table instead of the house. The house doesn't care about one spin of the roulette wheel. They only care about the law of large numbers. Think about trading events like the Swiss franc shock in 2015. Thousands of traders blew their accounts in one day because they bet everything on being right once. But the professionals who survived, they treated it like a casino. They managed risk, accepted randomness, and trusted their long-term edge. Here's a simple analogy. Imagine you own a small bakery. Every day, you know some customers will come in and buy bread, and some won't. You don't cry when one person walks past your store without buying. Why? Because you know enough people will come in over time to keep you profitable. Trading is the same. So let me ask you, are you trading like the desperate customer hoping to win once, or like the bakery that knows profit comes from steady traffic over weeks, months, and years? Here's my advice. Stop judging yourself by one trade. Start judging yourself by a series of trades, 20, 50, 100. Keep a journal and track your edge over time, not your win-loss on a single day. One trade means nothing. The series means everything. The moment you think like the casino, you free yourself from fear of a single outcome. Emotional detachment. One of the hardest lessons I had to learn was that my emotions were my biggest enemy in trading. Not the market, not the broker, not the strategy me. In my early days, every red candle felt like a personal attack. When I was in profit, I would get greedy and hold on too long. When I was in loss, I would panic and close early, only to watch the trade reverse and go in my original direction. Sound familiar? I'll never forget one day in 2017. I had 3 losing trades in a row on pound sterling to US dollar. My thoughts went wild. The market hates me. Maybe I'm cursed. Maybe I should double my next lot size to recover. I did exactly that. And within minutes, my account took a heavy hit. It wasn't the strategy that failed. It was my emotions. Mark Douglas, in Trading in the Zone, says the key is to think in probabilities. The market doesn't know who you are, and it doesn't care. That truth stings at first, but it's also freeing. Because if the market isn't against you, then your emotions are the only thing sabotaging your trades. Look at Paul Tudor Jones, one of the greatest hedge fund managers. He once said, "Don't focus on making money. Focus on protecting what you have." That's emotional detachment in action. He doesn't marry his trades. He marries his discipline. Think back to March 2020, when COVID-19 hit. Markets crashed, panic filled the air. Many traders lost everything because they traded on fear, chasing moves instead of calmly following process. The ones who thrived were those who detached, trusted their risk plans, and stayed level-headed. Here's a simple life example. Imagine you're driving in heavy traffic. If you slam the wheel left and right at every brake light, you'll crash. But if you stay calm, keep your lane, and trust your route, you'll eventually get where you're going. Trading is no different. Let me ask you, when you lose, do you treat it like traffic, something temporary, or like the end of the road? Here's my advice. Before every trade, say to yourself, I accept this trade could lose, and I'm fine with that. Never risk more than you're emotionally prepared to lose. The moment you accept losing, your emotions lose power over you. Detachment is the secret weapon that keeps you alive long enough to win. The shift from outcome to process. When I first started trading, I measured my worth by whether my trades ended green or red. A winning trade meant I was smart. A losing trade meant I was dumb. That obsession with outcomes almost destroyed me. One night, I stayed up watching euro to US dollar. I kept telling myself, if this trade wins, you're finally a real trader. It lost. I felt crushed, as if the market had personally humiliated me. I realized later I wasn't trading. I was begging the market for approval. The breakthrough came when I read The Disciplined Trader by Mark Douglas. He explained that professionals don't measure themselves by outcomes, because outcomes are random in the short term. Instead, they measure themselves by how consistently they execute their process. That was a light bulb moment. Think about Michael Jordan. Did he judge himself by whether every single shot went in? No. He judged himself by whether he took good shots within the game plan. Trading is the same. History backs this up. Look at the 1987 stock market crash. Many traders panicked and abandoned their systems. But Paul Tudor Jones didn't focus on the outcome of one day. He focused on sticking to his process. That's how he not only survived, but thrived. Here's a life analogy. Imagine a farmer. He plants seeds, waters the soil, and waits. He doesn't scream at the ground demanding results in one night. He trusts the process. If the weather ruins one crop, he plants again. That's exactly how you must think in trading. Let me ask you, are you more focused on whether your next trade wins, or whether you executed your strategy properly? If you only care about the money, you'll always be emotional. If you care about the process, the money eventually takes care of itself. Here's my advice. Start grading yourself after every trade. Not on profit, but on discipline. Did you follow your rules? Yes or no? Build a routine where success means I executed well, not I won money. Winners don't chase outcomes. They chase flawless execution. Because if you master the process, the outcomes eventually follow. Small losses are weapons. For years, I hated stop losses. They felt like punishment, like the market was slapping me every time I placed one. My inner thoughts were, if I don't set a stop, maybe the market will come back and save me. You already know how that ended. More blown accounts than I'd like to admit. The shift came when I realized small losses aren't enemies, they're weapons. They're shields that protect you so you can keep fighting. Without them, you're just gambling. I remember trading oil during the 2020 crash. Prices went negative for the first time in history. Traders who didn't use stops were wiped out overnight. But the disciplined ones, the ones who took controlled small losses, survived to trade another day. Books like Trade Your Way to Financial Freedom by Van Tharp stress this idea. Risk management is not about avoiding pain. It's about controlling it so it never becomes fatal. That's what separates amateurs from pros. Think of boxing. A fighter doesn't walk into the ring hoping never to get hit. He knows he will get hit. The difference is he learns to take small hits, guard himself, and stay in the fight until he finds his chance to win. That's what stop loss does for you. History proves it. In the 1990s, George Soros made billions shorting the British pound. But here's the part people forget. Soros was famous for cutting his losers quickly. He would pull out of a bad position without hesitation. That's why he could stay aggressive on the winners, because the losers never drained him. So let me ask you, how do you treat your stop loss? As a prison that traps you, or as a guardrail that saves you? Here's my advice. Never risk more than 1 to 2% of your account on a single trade. Practice celebrating a small loss the same way you celebrate a win, because that small loss kept you alive. Small losses are not failures. They're the weapons that protect your capital and your mindset, so you can stay in the game long enough to catch the big wins. The freedom of not needing to be right. One of the most dangerous beliefs I carried as a beginner was thinking I had to be right all the time. Every trade felt like a personal test of my intelligence. When I lost, I didn't just lose money, I lost pride. My thoughts went, if I can't predict this market, then I'm not cut out for trading. But here's the truth. You don't need to be right. You only need to manage risk and let your winners outweigh your losers. Look at Warren Buffett. He openly admits he's wrong plenty of times. The difference? When he's wrong, he loses small. When he's right, he rides the wave. That's how fortunes are built. In Market Wizards by Jack Schwager, nearly every legendary trader repeats the same idea. They're wrong often, but their ability to cut losers and let winners run makes them consistently profitable. Being right isn't the game, survival is. Think about 1999 to 2000, during the dot-com bubble. Millions believed they had to be right about tech stocks going up forever. When it crashed, those who couldn't admit they were wrong lost everything. But traders who accepted being wrong and stepped aside lived to trade the next decade. Here's a simple life example. Imagine being a baseball player. Even the best hitters in history strike out 6 times out of 10. Yet they're considered great because they accept being wrong more often than right and still show up for the next swing. So let me ask you, do you crave being right, or do you crave being profitable? They're not the same thing. Here's my advice. Shift your self-image from I'm a predictor to I'm a risk manager. Next time you're wrong on a trade, smile and remind yourself, even the best are wrong most of the time. Trading freedom comes the moment you stop needing to be right. Because once you detach from ego, you can finally trade probabilities, not pride. Confidence born from repetition. When I look back at my early trading days, I see a clear pattern. Every time I lost, I doubted myself. And every time I won, I got overconfident. My mindset swung like a pendulum because I had no foundation. What built that foundation wasn't a secret indicator or a magic strategy. It was repetition, taking trade after trade, following my rules, and learning to accept whatever outcome came. I'll be honest, the first 50 times I placed trades with discipline, I still felt fear. My inner voice kept saying, what if this one loses again? Maybe you're just unlucky. But by the 100th trade, something changed. My brain stopped reacting to each outcome like it was life or death. I finally trusted the process. It's like lifting weights. The first time you pick up a barbell, it feels heavy and awkward. But after months of repetition, your body adapts, and suddenly the weight feels natural. Trading psychology works the same way. Repetition rewires your mind. Look at Richard Dennis, the man behind the famous turtle traders experiment. He proved that with enough repetition and discipline, even complete beginners could become profitable. It wasn't talent that mattered most. It was drilling the same process over and over until it became second nature. Think back to the 2010 flash crash. Many traders froze, unable to act. But the ones who had trained themselves through endless repetition, they stayed calm, executed their stops, and lived to trade the next day. That calmness didn't come from luck. It came from drilling discipline over and over. Here's a simple analogy. Learning to ride a bike. At first, every fall feels like proof you'll never get it. But once you repeat the act enough times, balance becomes automatic. Trading is no different. You build balance by showing up again and again. So let me ask you, are you giving yourself enough repetition to build confidence, or are you quitting after every fall? Here's my advice. Don't chase perfection, chase practice. Take 100 trades with strict rules and watch how your emotions change by the 100th. Journal every trade. The act of repetition plus reflection creates lasting confidence. Confidence doesn't come from winning. It comes from repeating discipline until your brain accepts that losses are normal, survivable, and part of the path to mastery. Winning emerges from acceptance. The biggest paradox in trading is this. The moment I stopped fighting losses, I started winning. For years, I thought success meant avoiding losses altogether. I spent hours hunting for perfect setups, tweaking strategies, and second-guessing every trade. But all that did was drain my energy and feed my fear. The real breakthrough came when I truly accepted losing, not just in words, but in practice. I said to myself, every loss I take is the price of admission to this game. Without it, there's no winning. That shift was liberating. Think of Ray Dalio, founder of Bridgewater Associates. He built one of the most successful hedge funds in the world by embracing mistakes. In his book Principles, he calls pain plus reflection the formula for progress. He didn't run from losing. He studied it, accepted it, and turned it into strength. History shows this truth again and again. Take the 2008 financial crisis. Many traders tried to deny reality, holding on to collapsing positions. But the ones who accepted losses quickly, cut risk, and moved on were the ones who thrived when recovery came. Acceptance was the difference between ruin and resilience. Here's a simple real-life example. Imagine surfing. You don't control the waves. Some will knock you down. But if you accept falling as part of surfing, you stop fearing it. You just get back up and paddle again. The ocean hasn't beaten you. It's just being the ocean. So let me ask you, are you still fighting the market, demanding it move your way? Or have you learned to accept that losses are part of the natural rhythm, like waves on the shore? Here's my advice. Write this down and tape it to your screen. Losses are tuition, not punishment. Next time you lose, don't react with anger. Thank the market for the lesson and move on. Build your identity not as someone who never loses, but as someone who always adapts. Winning doesn't come from avoiding losses. It comes from embracing them as part of the path, freeing your mind to trade without fear. Acceptance is not weakness. It's the foundation of mastery. In the end, it wasn't chasing wins that made me consistent. It was embracing loss. Because the moment you stop fearing losing, you finally free yourself to trade like a winner. That's the secret I wish I had learned earlier. Acceptance is freedom. Freedom builds discipline, and discipline creates success. If this lesson opened your eyes, don't just move on, do something with it. Go back to your last 10 trades and ask yourself, did I accept the losses, or did I fight them? That simple reflection could be the turning point in your journey. And if you want more lessons that will rewire the way you think about trading, subscribe right now. Because the traders who win are the ones who train their mind as much as their strategy. Don't just chase the next setup. Start building the mindset that will carry you through every market storm.